Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, so today we're going to talk about MBS Highways February 2023 Housing Survey. First of all, housing survey. What does this imply?
It implies something quasi-scientific, right?
Okay, quasi-scientific.
Quasi. So what they did is they polled some mortgage people and some real estate agents and asked them a bunch of questions, and then they aggregated this data and came up with these results. So let's see what mortgage people and real estate professionals have to say about the real estate market.
Okay. Keep in mind, this could be biased. We don't know. We didn't grab the data. It's not our data. So people get upset. You're lying. Just the data we got rid of. Got it from an article. Okay. Okay. So I'll put up the first thing. We'll talk about it. So 57% of respondents characterize local buyer activity as very active, somewhat active or steady. So 57% of people are saying it's the same, somewhat active or very active. Now, you probably say, well, what does that mean? How do we know that it's very active is 1% or whatever? That's not really what's important. What's important was it was 23% in January and 19% in November. So this level of activity obviously has increased substantially because it's 3 times as active as it was in November. Now that could be, we had 10% of people seriously, looking at buying. Now we have 30%, but the amount of activity is much higher than it was.
It is, and what's interesting is that this is over a period of time when traditionally there's not that much activity because the weather's cold. I don't care where you are. To give you an idea of how cold it is, here in Vegas, it's been in the high 20s at night, so it's cold. So it's cold in Vegas, it's cold in other places, and yet buyers are coming out and they're looking and shopping.
Really quick before we go on to the next slide. Isn't it true that every year in the spring, there's more people buying, and every year in the fall, there's less people buying?
Absolutely. So,
okay. And it's a substantial, what percentage is it normally, difference?
It's a huge percentage because, it looks like by the time you get to November, December, it looks like a ghost town, right? And when you're looking about March, April, May, there's this whole buyer frenzy. It's a huge difference. And that's part of the reason why we see inventory numbers shoot up in the fall as well, because it takes longer to sell homes because buyers are generally already settled wherever they're going. A lot of that has to do with just the cyclical nature of the school year. Because let's face it, a lot of buyers happen to have little ones, or maybe not so little ones, that go to school. So people are trying to get their children situated before the school year.
Yeah, okay. The next one talks about pricing pressure. Pricing pressure abated with only 53% of respondents experiencing moderate or significant list price reductions, down from 74% in January and 78% in November. So and we showed that on our Vegas slides too, the number of people who have reduced the price on their listings is plummeting. Mm-hmm. It's back. Actually, right now, it's at a normal level. So in a normal market, half of all people list and then at some point have to reduce their list price. Okay. Now, we didn't have that last spring, because last spring, everything was flying off the market. Mm-hmm. So we've gone kind of back to a normal market with that, despite interest rates being now like 6.75%.
Right. So interest rates are still impacting the market. However, that's not the only thing that's impacting the market. To a large extent, it's more the inventory level that's impacting the market because buyers have the luxury of being a little pickier because not everybody has multiple offers. And so they are able to look around and maybe wait for the right house to come along rather than just any house.
Okay. This slide got my attention when I read the article because you were talking about inventory. Mm-hmm. Okay. With inventory levels still very low, the increased demand is leading to a resurgence of buyer competition in certain markets. Mm-hmm. 20% of respondents indicated that homes were, quote, selling quickly with multiple offers, end quote, up from 4% a month ago. It's literally 5 times more, 20%, quickly multiple offers. In a normal market, do we have 20% of homes sell quickly with multiple offers?
No, we don't have multiple offers in our normal market. It's not as common as it is 20% is still a good number. And just kind of anecdotally, we've had a house on the market for a while. It got showings, but it didn't get offers. And just this past weekend, it ended up getting 2 offers. So interesting.
Was that one of our listings?
Yeah.
Oh, okay. Good. I didn't know that. Okay. The next slide we're going to put up here, we're just going to talk. This is the whole country. It's broken into things. It's got 2 things on here. It's got activity, which is forward-looking, because the activity is buyer activity. It's very active, somewhat active, steady, somewhat slow, very slow. So if it's very active or somewhat active, it's active. And if it's slow, it's slow, right? So they've sort of like split the baby with steady. But and that's why they don't add up to 100%, because I don't know what they did with the steadies. You can see that when you look at buyer activity, buyer activity is a leading indicator. Why is that a leading indicator to what's going on in the housing market?
So sales are looking back, right? They're looking at what happened.
Sold price.
I'm sorry, yes. So sold price is looking back 30, 45 days when the property went under contract. But buyer activity is telling you what's happening going forward. So the more buyers we have looking, the more buyers are coming to open houses, then that tells you that buyer activity is picking up, and that's going to translate into offers and properties being sold.
Here's part of the problem with real estate and people that are looking at data and then come on the thing and get all super upset. If you turn on the news and you see that Facebook stock closed up 1.3%, that literally is instantaneous real time, meaning that those trades took place like 30 minutes ago and they're executed instantly in real time, okay, in fractions of a second. When a house closes in real estate, that thing was negotiated 45 or 60 days ago. That's not the price they agreed to, and stuff changes. So in a falling market, as home prices are falling and buyer demand is dropping off, when it starts to level off, you usually don't realize it's happened till it starts climbing up again, because you don't realize it until buyer demand picks up and then home prices start going up, only for people who have listed properties, because they're saying, oh my gosh, I got 3 offers, so we actually sold for more than list price or whatever. But the public doesn't find out for 45 days. And then the other thing too is the MLS doesn't instantly every day say, this is the median price of homes that sold today. It usually takes a month for them to get data together to spit it out. Some of these aggregators, you do go weekly. I think CoreLogic goes weekly, and Altos Research goes weekly.
Right.
They try to put out some weekly data.
Right, but remember, the weekly data mid-month isn't particularly valuable because most of the closings happen at the end of the month. So what happens really between the 1st and, let's say, the 20th, 22nd are a lot fewer transactions, on a daily basis than you're going to have between like the 22nd and the 30th of the month. That's when most of the closings happen.
The other reason you have to be careful with when you're looking at data, especially when you get big data like this, is you could have weird stuff happen in 1 month. So, for example, I was looking at Salt Lake City market because somebody said home prices were down 24%, and I looked July to February, and home prices they're within 1% of where they were. They're not down 24%. But what they did was they looked at this one specific slice of sales when potentially maybe some multi-million-dollar houses sold that week or whatever, and home prices shot up. Now, the housing market in all of Salt Lake City did not magically shoot up in a month $100,000 per house. That didn't happen. Home prices didn't skyrocket go from 5 to 600,000. But they got so wrapped up in that one number, then they couldn't let it go, and they couldn't look at all the other months where home prices were selling for $525. Right, or whatever they're selling for, and they were convinced that that's home prices always sold for 600 and they've crashed. So you have to be careful when you look at data. You have to look at all the data and look at data points along the way. That's why I think this chart's interesting, because you can see that there's downward pricing pressures in a lot of markets, except for the Mid-Atlantic market had more. But we know that you look at Southeast, which is the hottest real estate market. Pricing pressures is down 54% because there have been price reductions, moderate or significant. But then activity is up 64%. Like there's more activity. So it's going to be interesting to see. This is sort of the transition. This is when the market turns every year, right?
It is.
And then we did the other thing where we showed that January was the month where every month for the last 7 years, January had the longest time on the market. And every year it peaked in January and dropped in February. We won't know that till March, right? Because we won't be able to look back at February's data until March and see that it dropped. But that'll be substantial if it drops, don't you think?
Yeah. So, I mean, I think mid-March is when those numbers will come out because they have to reconcile all that. So it'll be interesting to see when those numbers come out, and we will have them for you. So make sure that you subscribe, you hit the notification bell, and you like the video, and you share the video. And do you like these charts? I like them because I like all the numbers, and I like kind of digging into the numbers. Do you like them? Tell us in the comments if you like them. If you have a subject that you would like us to cover in videos, please give us suggestions. We do read your comments, and if we can accommodate your suggestions, we would love to do that.
No shit posting. Some people have been shit posting recently.
I don't know what that means.
It's where you're just basically, you're egging people on into a fight, or you're quoting some crazy, it's like people, like interest rates were up. So everyone piled up on the interest rate video that, oh my gosh, interest rates have gone up. They're going up to 7%, and this is going to crash the housing market. And it's like, okay, well, we have no inventory, and we still have all these buyers out there that are buying. So, and what about, okay, so interest rates are up. That just means the cash buyers are going to win all the houses, right?
Well, I think everybody needs a place to live. And I think when people come across the right house, they make it happen, because the right house does not come along every day. And I think people are willing to do what it takes to get the house that they want.
I think so.
So if you like the video, please subscribe, hit the notification bell, like the video, share the video, leave us love comments, be nice to each other. I didn't use that word. I said be nice to each other. Yeah. And we'll see you on the next video. Bye.
Bye.